3 years since the government introduced the bank guarantee scheme, I'm joined here by Dan O'Brien, Irish Times economics editor. Dan, can you tell me about the introduction of the scheme, why it was brought in and what effects it had?
Well, from early in 2008, there were clear problems with the Irish banking system. After a very long period of sharply rising property prices, investors, people began to have second thoughts about whether the Irish banking system was sustainable. In August of 2007, globally, there had been the beginnings of a credit crunch. So early 2008, the spillover effects, weaker banks were beginning to be affected by that. Ireland was clearly one of those countries where the banks were weaker and more dependent on short-term funding. Then in the middle of September 2008, Lehman Brothers collapsed and the global credit crunch went critical. Within 2 weeks of that, the already weak Irish banking system was on the verge of collapse, and the government was in a position where it had to do something. It had already guaranteed most deposits in banks, and that was clearly not enough to stem the panic. And 3 years ago, it then decided that it would have to guarantee everything to prevent a shutdown of the banking system.
Now, hindsight is a wonderful thing, but do you think, Dan, that that move helped or hindered Ireland's situation?
I think it's greatly overstated in terms of the importance given to it. You know, the losses were made prior to the collapse. The losses were made by a huge amount of bad lending to the property sector, and those losses, it was not clear at the time how big those losses were, how enormous they were, but the situation was spiraling out of control, and governments everywhere, if they can prevent their banking systems collapsing, they do that. Iceland, for example, just a few weeks earlier, had shown that they were not able to stop their banking system collapsing. It was just even bigger relative to their economy than the Irish banking system was to the Irish economy. But around Europe, there was a belief that we've seen what can happen with Lehman. If we let that happen here, things are going to slide out of control. So there was a European-wide view taken to support banks.
And do you think that 3 years later again, that a similar situation could arise again?
Well, I think there's always a risk with banking is an inherently unstable and risky business. So the banking crisis have been a feature of banking since it was invented. So there's always a risk. Right now, I think there's much less of a risk because as banks over-lent during the bubble years, they're under-lending now. They're extremely cautious now. Plus, the regulatory framework here has been made infinitely stronger. Too late, many would say, but that has changed to a huge degree. So the risk of that happening now is very limited. Are we better off or worse off? This is a hugely controversial issue. I would point to the fact that the Irish government has not been able to default on bonds of banks, whether or not they're guaranteed. And therefore, and that's from a European perspective, that's a European view that's been taken that governments shouldn't default on banks and let their banking systems or part of their banking systems collapse. So it certainly seems that it seems to me that the banking guarantee didn't actually make that much of a difference at the end of the day.
Looking forward then, do you see the banks having as central a role in the Irish economy in the future as they did in the near distant past?
Well, certainly not, because property won't. And it was that nexus between property and banking that led to the disaster and the collapse in output and a depression-sized collapse in economic activity here. So certainly, I think for as long as anyone is alive, we won't have that kind of thing again. But they say about financial crises that the next one happens after the people who were alive during the last one have all died off.